This is Alan Farley from FX Empire. Dow Component Apple reports earnings after Thursday's closing bell. Taking a look back, the stock broke out above the February 2020 high, right around the 80 level in June. It took off in a very strong uptrend that accelerated after Apple announced the stock split. Right after the split, it topped out close to the 140 level, entering a correction that dropped down to about 100. Stock then eased into this rising wedge pattern that was created after this reversal in January and another reversal in March. As you can see, it came right back up to this rising highs trend line in September and then reversed, coming out about 2/3 of this distance to this prior low. So we still have a potential exposure down here to about the 135 level and the 200-day moving average. Well, we're right here, right in the middle of this little pattern, and we could get up to 160 on a good report, or we could sell off to the 130s on a bad report or afterwards. Now, the cycles are kind of mixed. We do have this sell cycle on a daily, which may keep some pressure on the stock. If you take a look back at the weekly chart, you can see that the weekly is looking just fine for a thrust up to 160. But the real question comes here on the monthly, which is the big cycle, right? So we do have a crossover right here into a sell cycle that suggests in the longer term that bears are controlling price action. If so, we could get down to that 135 level. More importantly, I wouldn't really expect big upside from this report, especially with this rising highs trend line. Do you really want to buy a stock at 150 that has a reward potential of 160? That's kind of a problem. So reward risk is not really favorable for most folks right here, regardless of how well the company did during the prior quarter.